Global de-dollarization. Is the world right now going through this process of dumping the dollar or not? You'd think this would be a pretty straightforward question to be able to answer. With recent reports by Bloomberg about de-dollarization happening at a stunning pace, statements about Saudi Arabia joining de-dollarization, news about the BRICS nations, their push for de-dollarization, amid talks about international trade settlement taking place with Chinese yuan. Yet at the exact same time, we can find data that seems to contradict all of this, with the share of dollars in international transactions virtually unchanged since the 80s, the dollar index virtually unchanged since the 70s, both the percent and the number of dollars in foreign holdings both growing over time. So is the world de-dollarizing or not? And if they are not, why don't America's enemies all band together at once, dump the dollar, crush America, and start to live a free and prosperous life moving forward? Well, we have to look at this from a number of different angles, because when you talk about the dollar as the global reserve currency, you're actually talking about two separate things and you're calling them the same thing. But there are two different things going on here. On one hand, we have the dollar as used for international trade. So when countries buy things from one another, they're using the dollar for that transaction. But on the other hand, you have something different. It's related, but it's different. It's the dollar as a reserve currency for a nation. You can think of this like saving versus spending. Many people will save and spend in the same currency. Like if you've got dollars in your bank account, you're obviously using dollars for spending as well. But some people will save in something else. Like maybe you put your savings in gold, somebody else might put their savings in Bitcoin. Meanwhile, they're still spending dollars. Though the same thing happens on an international scale. Nations will save money in something like gold or other currencies or sovereign debt, but they will also need a currency to spend as well. And so as we'll see, the dollar as an international trade currency hasn't started to go anywhere yet. On the other hand, dollars as reserves has had a huge decline in recent years. So what are the differences between these two uses of the dollar, and why haven't America's enemies yet gotten together and once and for all dumped the dollar? But first, I need to tell you about today's sponsor, my friends over at McIlvaney Precious Metals. Many people are familiar with the gold to silver ratio. Simply put, the gold to silver ratio is how many ounces of silver does it cost to buy 1 ounce of gold. Over time, this ratio fluctuates, and sometimes gold is expensive relative to silver, and other times silver is expensive relative to gold. Well, for the last 50 years, McIlvaney Precious Metals has been tracking the price of silver compared to gold. And many people are aware that there is an opportunity to take advantage of this, of buying one when it's relatively cheap compared to the other, and then flipping back and forth when that ratio changes. The problem is timing this right and not overdoing it. Doing this correctly over time would have results that looked something like trading 10 gold coins for 7 silver bars. And then when the ratio changes, you trade those silver bars for 15 gold coins. When the ratio changes again, you go back to silver bars, and then again go back to gold coins. Now, over time, it is absolutely true that gold and silver are correlated in their performance. They usually go up at the same time and down at the same time, but they rarely go at exactly the same pace. And because of that, you're presented with opportunities to sell gold and buy silver, or sell silver and buy gold. This strategy allows people to avoid jumping in and out of markets trying to hit the tops and bottoms, because you never actually have to be out of physical precious metals. Clients of McIlvaney Precious Metals who participated in this strategy recently have been either able to double or triple their ounces. And if you are interested right now, Heresy Financial viewers get a free consultation with a McIlvaney advisor. Link is in the description below. So first, let's look at the dollar as an international trade currency, the money that countries use to spend to buy things. As we can see this chart put together by EpsilonTheory.com, the dollar as used in international transactions is not going anywhere yet. In fact, since the early 2000s, it is actually on the rise. The percent of euros used is on the downward trend, just as the yen is on a downward trend, and only the Chinese yuan is on a little bit of an upwards trend, although it makes up a much smaller share. Now, the money that a country uses to spend, to buy things, is related somewhat to the money that it uses to save its purchasing power, and although they're not entirely the same thing. We can also find charts that make it look like the US dollar has relatively little change in terms of its reserve status. Again, with the foreign holdings of US dollars going up as a percent and also increasing in terms of the number of dollars. But a recent report from Eurozone SLJcapital.com breaks down the reason why the erosion of the US dollar as a reserve currency is understated. Most analysts only calculate the nominal value of central banks' dollar holdings without taking into account the price of the dollar. Adjusting for the price change, the US dollar has lost 11% of its market share since 2016 and double that since 2008. Since 2000, the market share of the dollar as a reserve currency went from 73% of official global reserves to 58% today, even though its use as an international currency for trade has not shown any signs of decay. In 2010, the dollar was used for 85% of global transactions, and today it's being used for 88% of global transactions. So the dollar is alive and well as being used for transactions, but it being used as savings, as a reserve currency, is on the decline. Most analysts don't pick up on this because they're just looking at the total number of dollars out there. The chart on the left shows in dollar terms its share of global reserves. Compared to the euro, it looks like there's not that big of a change. But when you adjust for the dollar's price, as shown on the right chart, you see a big divergence within the last year or two that shows the real currency share, showing a drop of about 19% in the real change in shares since 2004. Now, obviously, a lot of this has to do with recent geopolitical issues, sanctions against Russia, and many countries realizing that they want to store their wealth and their savings in something other than a currency that could be taken away from them at the blink of an eye. But this hasn't yet translated into countries using the dollar less for transactions. So what in the world is keeping the dollar afloat? Why in the world do all these countries not just decide, hey, we're going to dump dollars now and we're going to stop using them? Because certainly that would hurt the United States much more than it would hurt them, right? Actually, no. The main reason why the world doesn't dump dollars all at once is because most people who want to get rid of dollars need dollars more than they need to get rid of them. In other words, they owe more dollars than they actually have. Globally, there's at least $65 trillion in dollar-denominated debt. Compared to $104 trillion of global GDP, this means that $65 trillion worth of dollar-denominated debt is pretty big. When you have dollar-denominated debt, that means you owe dollars. So your mortgage, your car loan, your credit card, these are dollar-denominated debts. And so if you've got a savings account full of dollars and you owe dollars in debt, the situation that the world is in right now in aggregate is a savings account of, let's say, 50 grand and dollar denominated debt of, let's say, 200 grand. It wouldn't do you much good to try and hurt the dollar by dumping those dollars, trying to reduce the price of them, because you owe way more in dollars than you actually have. In terms of currency swaps, the dollar is the other side of the trade for $85 trillion worth of outstanding positions. This means two things. Number one, if you want to be able to do international trade in other currencies, you're using the dollar to get those other currencies. It has a very strong foothold as the anchor, as the vehicle to get other currencies, even if you want to do international trade in currencies other than the dollar. Number two, this means that there are countries all around the world who are scrambling to get dollars to pay off their debt that they owe in dollars. They cannot try to dump dollars. They're trying to get dollars to pay off their debt. And while it is true that global treasury holdings have been on the decline recently in exchange for holdings like gold, of which China is a huge portion. They've been getting rid of their treasuries just as Japan has. It is also true that these countries have been loading up on their own debt. And if you watch this red line, which is China, you can see that its debt gets crazy compared to any other country. Now, China's debt is not all dollar debt, but a lot of it is. This means that the nations who have the ability to try and hurt the dollar and the US by dumping treasuries all at once and by dumping dollars all at once would end up hurting themselves far more because the liability side of their balance sheet is so much larger. In my opinion, it is inevitable that at some point in the future, the dollar is no longer the international reserve currency, neither used for international trade nor held as reserves. But the countries with the incentive to try and dump the dollar in their current position would hurt themselves far worse than they would hurt the United States, which means that until that changes, nobody can try and dump the dollar. In aggregate, everybody is still trying to get as many dollars as possible. Yes, it will happen at some point. No, it's not going to happen anytime in the next couple of months, probably not even the next couple of years. As always, really appreciate you guys. Thanks so much for watching. Have a great day.